Hold on. Let me try this. Can you hear me now? Oh no, I can hear you guys on Discord. I'm asking if they can hear me on YouTube chat. They cannot. Oh wait, good. They hear me. Hi guys. Bye. See you later, Discord. Bye, Jason. Bye, Izzy. All right, there you go. I know what I did too. Oh my god, I had such a night last night. My computer, it's got the oh good, everybody can hear me. My computer, you know, one of those nice gaming computers with the freaking LED lights and the NVIDIA Pro Series 3000 RXT, whatever. I haven't cleaned that thing since I bought it 5 years ago. So it is just a dust monster. And I was real nervous because I read things about static discharge, and my name is sTAtic, so that just would be kismet right there. So I unplugged that thing, and I dusted it out yesterday, and I plugged everything back in, and it turned on, and then my mouse stopped working. No mouse. So all last night for like an hour and a half, I'm looking up YouTube videos. I don't even know how you can like get into your computer without a mouse. And I went to bed last night and I said, I guess there's not going to be a stream tomorrow. Day number 2, no stream. Going to have to like post something. Woke up this morning, made a cup of coffee, looked at the back of the computer again, and realized that the thing I kept unplugging and plugging back into my USB over and over and over again to get the mouse to work was actually my keyboard. And that the mouse cord was just sitting there. So needless to say, I had to get back on my Amazon app and tell them that I didn't need a new mouse anymore. Anyway, that's what I was dealing with last night. Well, I'm glad everybody can hear me. Couple cool little additions here I did on the screen here. I discovered on TradingView there's like a bunch of, you can, easier to follow the mouse. Yeah, follow the bouncing ball. And I'm not really sure what I would use this one for, but that's pretty cool. And I bought a toy. Check this out. I can draw. That's not my mouse, that's a pen. I thought that was pretty cool. Anywho. All right, so yesterday, in the interest of entertainment, I put a trade in, I think at about 10, 20 on TMDE. Got stopped out, lost about $450 for your entertainment, and then had to spend the rest of the day trying to get my money back on other trades like BATL. Actually, I did revenge trade this one when it got down to under here, and made a portion of my money back, and then I made a pretty decent trade here on BATL, and I just kept shelving it. Actually, there's some of my leftover drawings. Just shelved it until market close here. Purple is after hours. All right, this morning, pre-market. This is what we're looking at. Oh, one more thing. I was listening to myself, right? Because first stream yesterday, so of course I went back and listened to a majority of me and Rick to see how the sound was, to see how the vibe was. And I think if you go back to the video yesterday, at minute 48, roughly, I was on this screen here. And I was saying that at the time, let me rewind it. This was before market open. That I had determined that this one was probably going back to take out this liquidity here and go back to equilibrium. And that is exactly how it played out. And it hit that equilibrium perfectly. And then later in the afternoon, I was able to get in on this trade. So yeah, I mean, you could see here, this is what they do. They can't, there's no liquidity. This is not liquidity anymore. This liquidity is gone. Anybody who had stops above this got wicked out here. So there is really no benefit to just take this price up from this point here at market open. This is where the stops are. The stops are down here. And they need to take that out before they can enter and take it up higher. But yeah, this is how the rest of this played out. You can see here is the 15-minute opening range. And oftentimes they will do fake outs, basically, for lack of a better word, before they take it up to ungodly numbers. I mean, what did this pump yesterday? 113%. All right, so I'm on my own this morning. I don't have Rick to hold my hand. He was very nice yesterday. I as confident as I sound all the time. You know, everybody's got anxieties, and man, I hate cameras. I hate the idea that I'm streaming right now, and however many people are watching, 3 people are listening. It makes me nervous. And so I told Rick for my first show, if he could come on to assist, I would, hold my hand, be my blankie. I would appreciate that. And he stayed up late in Australia to do that, which I really appreciated. Today, I thought we would go over. Yesterday, we did some pretty complex things. We did order blocks and fair value gaps. I thought we'd go back into crypto land here and talk about some patterns, because I realized yesterday we went over Bitcoin, but we really didn't go over like altcoins, what's going on in that market, as well as Total 3 and others dominance. Where is she? Here she is. Let me go to a default. Here's the others on the weekly. And this is some bad news here for altcoins. This is how the last bull cycle ended for altcoins, with this kind of wonky head and shoulders. And then you could see, as we were talking about yesterday, gapped down to take out stops here. This became a point of interest eventually, with kind of a wonky inverse head and shoulders, which sent us back up for this run. And this is almost like a textbook head and shoulders that has broken the neckline. And this is the bad news here for altcoins, I believe. This is a double top over 2 cycles. And this is going to have some pretty heavy consequences. The good news is there's strong support at $0. I'm kind of kidding. I don't think it'll go that deep. But if you take just the measured move, if we take this off log, I mean, literally the measured move on this pattern is beyond 0. Negative 52 billion. I don't know if it's going to be this cycle. Could be the next one, but eventually a lot of these altcoins have to go away. Fart coin, kitty coin, Pepe coin. Even Doge. I don't know if Doge, please don't hate me, but I don't know if Doge has like any major future. I don't think there's the dancing dog. I don't think in 20 years it's realistic to believe that Doge is going to be a thing. I don't know. I'm not sure what its use case is. I don't get it, but I'll trade it. Speaking of some TA on Doge, this is Doge on the weekly. Here's Saturday Night Live. it really just failed to meet expectations. I mean, I was personally hoping it would go to $1 roughly, right about this upper trend here. Definitely let us down. Consequences of breaking this structure here. This is my personal target. I think it's going to run anywhere between a penny and 2 cents, possibly if it gets a little strength up here to take out this liquidity here. But there's a pretty huge gap, fair value gap. If you look at the way Doge ran, this is when it was kind of nothing. Had its first little pump in 2018. And then we got that double pump for, I believe it was 420. And then the Elon thing. And it left a giant gap here, this weekly candle, where it did not trade. It has never really been tested anywhere between a penny and 2. There's a strong case to be made that that's its overall target. And then everybody and their mother is like, oh my God, if I could get Doge at a penny or 2 cents, that would be amazing. Yeah, I mean, I'm not going to lie, I'm going to buy some. I don't know if I would sell my house or mortgage my children to, buy it for a penny or 2. I don't know if I would whole bag it or put my retirement in there. But certainly there's some opportunities if we get down there. And this is, anybody who doesn't follow Ben Cowan on the interwebs, this is kind of a chart that he likes to look at as a explanation as to what's going on in the altcoin market. It's basically total 3 minus USDT divided by Bitcoin. So this is all of the altcoins minus the USDT, which is the stable coin. And he views these as altcoins he claims are nothing more than an oscillator against Bitcoin. I would kind of agree with that. I mean, it makes sense. Here you have our first altcoin rally in 2017, and this is the big one in 2021. It really hasn't done anything since 2023. There's 2 ways to look at this chart. It appears to be headed down. The question is it going to go down to this level here? And this is just kind of like a shakeout? Or is it going to respect more of this trend right here? Rick was talking yesterday. If you have 2 points, that is not a trend line, but it's certainly the start of one. You need 3 points to validate a trend line. And right now, there's certainly a little bit more validation on this line at 0.25. But a case could be made here that this is where altcoins are headed. I think eventually, whether it's this cycle or the next cycle, we are definitely going to have some sort of .com. Anybody who knows what that means from the 90s, when the internet, if anybody listening is young, when the internet really first kind of boomed and everybody got their home PCs, there was a website for everything, for corn.com and coffeecups.com, and people were using Netscape, and all different fights were going on in the corporate world for browser dominance. And at the end of the day, no one uses Netscape anymore, but everybody uses Google or Microsoft. So Netscape lost that battle. No one uses AOL.com anymore. Yahoo, I think Yahoo Finance is still a thing, but no one typically goes on yahoo.com to do their searches. They go to Google, they go wherever. I think that's kind of like where altcoins are headed. There's I think like 30 million altcoins now. And in the last cycle in 2021, I think it was in the hundreds of thousands. So it has absolutely ballooned, which means that every time you, me, or anybody puts money into an altcoin, it's a very diluted market now. If we're all putting money into all sorts of different altcoins, then none of the altcoins are really going to run because they're too spread out. You need more of a consolidation of choices to really have money make impact. Yeah. Wow, look at all the red. What a red day here for altcoins. All right, basic patterns here. This is a good chart to do it on. Figured I'd just go over a couple. If I can, let me get a sip of my coffee here so I can remember where the, there it is, found it. All right, what is a head and shoulders? Price comes up, tests some sort of resistance, whether that resistance be price expansion, fib maybe, you know, comes back down, comes to a higher high, comes back down, and this time fails to put in another higher high. Does something like this, and it comes back down. This is when a head and shoulders fails, when it breaks what's called the neckline, which is this support point here. And we can do that. That's fine because there's some manipulation. But here, that's textbook. When this neckline breaks, that's usually your indication for a failed head and shoulders. Now, of course, like we were talking about yesterday with manipulation, they can always fake it out. No trade is perfect. We're trying to play probabilities, percentages. There is a, so let's say 70% chance that this is going to fail and not trick you out. Now there's two types of head and shoulders, one where it just goes. The other one is a back test, where it will back test that and then it will drop down. Conversely, there is a thing called an inverse head and shoulders. That would be that. This is a bullish reversal sign. You've come down, sellers pushed it to here, they pushed it to here, and this time the buyers said, no, we're not going back to that level. We're on board, and hopefully you're up to the upside. Cup and handles. So this is a reversal pattern. Reversal, that's important. Reversal from the top, reversal from the bottom. Sometimes people will, I've seen people do this, we're coming down and we do something like this. And people go, oh, that's a head and shoulders. That's not a head and shoulders. I don't know what this is, but head and shoulders are only at the top of trends, not at the bottom of trends. So this is not a valid pattern. Cup and handle. Cup and handle is a continuation pattern. For example, you are going up, you reach some sort of level, and you do this. Actually, I got this backwards. Forgive me. Continuation pattern. You're coming down, in this case. This would be an inverted cup and handle. And you do this. It will continue. Once it breaks this line here, it will continue to the downside. Conversely, this is a cup and handle like we saw on Bitcoin over the last couple of years. Price comes up, hits a resistance. Buyers say, no, we're not going any lower. Kind of similar concept to a head and shoulders. And then we continue up. But again, this is a reversal pattern. This is a continuation pattern. Probably one of the biggest ones I see people get confused with is they think that any type of, like, let me quiz chat right now. Bullish or bearish? Is this bullish or bearish? Anybody? Come on. Somebody, bullish or bearish? Bearish. Correct, Mel. Correct. Let me try this again. I'll show you. There we go. Okay. People see flags after uptrends and they think anytime I have anything that resembles a pennant, this is great. This is bullish, and that is incorrect. This is bullish. This is bearish. And let's think about why. What is this pattern telling us? It's telling us that if the pressure from the sellers is up here, and the buying pressure is down here, the sellers are winning this battle. So every single time that price tries to go up, the sellers bring it back down. And every time the buyers bring it back up, the sellers won't let them go higher. And it keeps doing that. And this is what's called a descending triangle. Descending triangles are bearish. Conversely, this is a bullish pattern. This is a continuation pattern. Buying pressure keeps mounting higher and higher until it pops. Now, what's interesting is descending triangles, this one here, are bearish no matter where you see them. This is not a reversal pattern. If you are coming down and you see this, you are likely to continue down. You are not going to pop back up. Conversely, if you're coming down and you see this, that is a potential reversal pattern. Buyers are going higher and higher until eventually the ceiling breaks and the pressure mounts and it pops. Okay. All right. Let's see. This is a bull flag too. That is potentially bullish, but like Rick was pointing out yesterday, there is always some sort of level of manipulation before you get a pop off. They're constantly trying to clear out liquidity. I mean, if you think about how a bull flag is formed, it's kind of formed like this. This is constantly a search for liquidity. Here they are. People have stops here, and these stops get taken out. So now people put stops here, and those stops get taken out, right? And then oftentimes, with the rule of three, right? Oh, look, I have a trend line now. I've got 3. That means we're never going down again. We're going to go up, and we're going to break this flag. What they like to do is they like to do this move one last time, just to screw with you. So this is the manipulation. What you always want to see before you enter any trade is some sort of manipulation. And I can talk about that right now. What is accumulation, manipulation, and distribution? It is basically this. This is accumulation. Good example would be on Link. Now, accumulation comes in different forms. Sometimes it looks just like this, and then you get a little bit of a spring test before it pops off. But if we go to like Link, for example, it's probably the best one I could think of. This is one I got heavy in between, what, 22 and 23. I owned it for an average price of about $8. This is pretty classic accumulation here. came down in May of 2022, and it just went back and forth, and they accumulated it. And here's their little manipulation spring test. Took place right here. They cleared out all of this liquidity. Anybody who had stops down here, let's say you owned it for an average of $8 and you had your stop at, I don't know, $4.99. Right before they decided to make their move, here's a 3-candle pattern where they, on this first week, took it down to as low as $4.75, wiping out all of this liquidity. And then on this 3-candle pattern here, it closed back above these lows on increasing volume right here, and they took off with it. Okay, so going back, I don't remember what page I was on. Oh yeah, up here. 3 phases called AMD: accumulation, manipulation, distribution. Price accumulates, price manipulates, and then it distributes. And this works in all phases. You can have a ascending triangle, like we were just talking about. Oftentimes, if you look at your ascending triangles, you'll be like, what the fuck just happened? Well, that's what happened. And sometimes an ascending triangle, like if we go to Bitcoin on the 12-hour, oh, let me think. When was this? Yeah, right here in this bear flag. I think Rick actually first pointed this out. Let me see if I can remember how this went down. This was November. This is our, yeah, okay. So this is pretty standard bear flag here. That is a continuation of the downside pattern. But if you break this down, it didn't start with a bear flag. Actually started with arguably some sort of rising wedge there, which is potentially could go either way. It is showing buying pressure mounting, but then they took it down, establishing your first point here of a potential bear flag, and within this bear flag was another bear flag. See it? And then right before they decided to take it down, here's your manipulation. They cleared out these shorts right here. Anybody who had short positions and stop losses there. And if we take this back, yeah, they cleared out all of this liquidity here. So anybody who had reasonable stop losses in this range right here, you were their entry liquidity into this. Like we talked yesterday, big money movers have to find a way to get in a market. And the only way they can get into that market is if they have somebody to buy from or somebody to sell to. And stop losses are the way to do it. Yeah. One last thing about fair value gaps, which we were talking about yesterday. If we go to the daily, we talked yesterday about, for anybody who wasn't here, this was where we talked about bearish fair value gap, and then over here, a bullish fair value gap. And this is an inverse fair value gap. This one here is a bearish fair value gap. This one here is a bullish fair value gap. One thing I thought of afterwards that I should have mentioned is volume profile and how it works in context with fair value gaps. That one doesn't have volume. Hold on. Okay. Volume profile. I see people use this. If you use fair value gaps in context with volume profile, let me do this a different way. On the way up, points of interest or reaccumulation will occur, and during that, you will get this these edges, these cliffs that stick out on volume profile. Same thing down here at the bottom of this market here during this accumulation phase on the weekly. You'll see, there you go, you got these big shelves of volume. As it gaps up, you see nothing was traded in here. There is a void, okay? In order to trade fair value gaps, you have to take into account are the powerful players defending their positions. So if you think of this as a cliff here, this was aggressively defended by the sellers. The sellers are like, no, we're not going past here. We're going back down into the range. Again, here, when this cliff got penetrated over here, aggressively defended. When you see fair value gaps that penetrate into, so here's a fair value gap, and it's in a void, okay? This is not really an important fair value gap. When you start to see fair value gaps occur like here, penetrating this large profile here, that can be a substantial move there. And we went from 10K to, that's what is that, 30%? 30%, 10 to 15K is 30% move. On the downside, where's my delete button? Oh, there it is. Let's go back to that anchored VWAP here, or anchored volume profile. So here's a great example of where it was not aggressively defended. Here is your block, your area of interest. And you can see here, when we pumped here in October of 23 on this fair value gap, there is no defense. There's no wicks pushing it back down. You know, here, this is very bullish. Here's your cliff. This is a big defense by the bulls here. The bulls have defended this cliff here. And what do we mean by cliff? So think of it this way. If you are like, I don't know, on a ramp or a bicycle or something like that, if you can make it up to the top of this cliff and over it, your momentum is going to carry you typically to the next one, at least. And then we're going to see if it's defended. And it did not. They tried to defend it on this wick, but then the fair value gap took place. So we're likely to head to the next point of interest up here. That's on the way up. On the way down, it's pretty different. You see on the way down, typically the voids here don't really mean much, but the fair value gaps take place here. So I'm expecting to see some sort of consolidation here at point of interest. It's probably to come back up, try and test this right here. It's going to get wicked down, and then you're going to see it fair value gap through this edge right here. This is where you're going to expect to see a big bearish fair value gap, possibly even two, that'll take out this liquidity here. And then we're going to have to see when we get to this one here, whether the bulls are going to defend or not with some wicks like that, for possible turnaround. And if they don't, you'll see some consolidation here, and then you'll see a fair value gap. It takes you through this edge, takes out this liquidity here. And then once they get past this ledge, I mean, this is no man's land. There's no reason for it to stop here. It's not going to stop in a void like that. It's going to its next level because the momentum, just like on a bike, is taking it down to this volume profile. And, maybe if it goes, I don't think it'll go that far. I'm hoping it'll stay here at this shelf, 45, 43, 48, whatever. If I'm wrong, and it goes down as low as 30, 33, it certainly wouldn't not make sense because there is an unmitigated fair value gap here that hasn't been traded. And this is an inefficiency in the market that the algorithm wants to fill in. Hopefully that all makes sense. Yeah, so that's that. All right, 9:14. Yesterday, I got a very nice text from somebody yesterday. Very supportive. Who I guess picked up on the fact that I felt a little like I had to entertain, and forced to make a trade yesterday. And they were basically saying that, do you? And that is what I'm going to do today. Figured today I put on some background music. So when I'm trading, I don't need to talk so much. Okay. Why is my chart wonky? There we go. Oh, because I'm on the weekly. Durr. All right, this is an interesting one. Ruby popped off at 19%. Premarket. This is your Asian high, Asian low. It looks like right before the Asian market, they swept some liquidity of the London high. Now we've got somewhat relatively equal lows above the New York midnight open, which is this purple dotted line. There's definitely liquidity up here still. Liquidity here, liquidity here. It's coming in as a weak high. And right now we're at basically the 50 fib, which again, equilibrium just represents 50 fib between here, strong low, weak high. I'm going to keep an eye on this one this morning because there is, let's see here, liquidity, lower high, higher low. Yeah, that's one I'm interested in. Basically, I know I was muttering there. Eventually, this thing is going to want to come back down to this order block, but it is certainly possible that we get a little manipulation here and then eat back up to another higher high. There's also this potential right here. And you could see how there could be a possibility today that we take out both these liquidity points, fill in some sort of angular trend line here, and hit this order block up here before the end of the day, bouncing off this 50 fib, this equilibrium, before yeeting back down, you know, over the next couple of days towards this order blocks down here. But we'll see how it reacts at market open. Yeah, RSI, there's a bullish divergence here, small one on the 5 minute. Let's go to a higher time frame. HSI has come off of a pretty close to an oversold. So we'll see if this starts to break the 50 on 15-minute chart. And we got a yellow dot. What is a yellow dot? That is Scott Carney technology. That's funny. We were talking yesterday about how the market likes to do 3 basic components. It likes to search for inefficiencies in the market and fill them back in, right? These are the fair value gaps. It likes to search for liquidity, which is the stop losses above and below. And it also likes to hit equal lows and equal highs. So a couple scenarios here. I could take out those 2 relatively equal lows this morning and then yeet up. It could go yeet up right now, come back for these equal lows, but it will, all these things will happen eventually. Liquidity will get swept, fair value gaps will fill in, and equal lows and equal highs will get taken out. And that is the 3 primary goals of this market. So you just got to kind of keep that in context as magnets and try and figure out what direction we're headed in. All right, market's going to open in 10 minutes. Again, I'm going to probably be doing a lot less talking this time, so I found some music. How's the stream quality, by the way? It's telling me it's poor on the streamer here. Is the audio and visuals coming through clear? Thank you, thank you. Okay. All right, next test. Like I said, market opens in 9 minutes. I'm going to turn on this music, and you tell me if it's too loud. All right, sweet. Music is not too loud. All right, little tip today. If I'm being quiet and you see me do this, this does not mean I've made an entry. This means I'm starting to eyeball one. get an idea of whether I'm even interested. So probably what I'll do to make it more visually easier for anybody who's watching is once I do actually enter a trade, I'll put a little box around it like that. And that will be my official way of saying I am in. It has been purchased. Sweet. And then one last thing, a little reminder. This morning, when you're looking at the chart in the first 15 minutes, see this green box here? That is the opening range, and you're going to see it develop like this. I'll show you what it looks like on the 1 minute. Market opens up. This gray box here is it determining the first 15 minutes range, high to low. And then once this turns green or red, it's locked it in. And then we are looking, we don't want to get involved if it's just trading sideways. We're looking for breaks up or down. That shows volatility. That's a break. So here's an example of how they move, right? Here's your, where was everybody's stop losses? Stop losses were probably right around this area. And so they went right through those stop losses with a big fair value gap. Let's see how it progresses. Fair value gap gets filled in. That's the inefficiency. Sometimes it'll get rejected. So if this is the fair value gap, that's your 50 fib. Okay. So there's no reason to be entering along here, right? What do we got? We have a bearish bias. We have a back test. We have some sort of accumulation. It's hard to tell yet whether it's a reaccumulation to further downside or if it's to the up. If you're trying to scalp this on lower time frames, like a minute, this is a liquidity sweep right here. If you had dropped to like the 10-second, on this sweep here, you could have maybe entered here. You got some confluences. We're in strong low on the 10-second. We have a bullish fair value gap. We have broken a potential reversal zone. This green thing here is Scott Carney software. HSI, RSI are pointing upwards. Yeah, I mean, this could have been a good scalp if you had entered on that candle. That's 4% right there. We're hitting equilibrium, 50% fib. Trying to find support. Get some bullish orders here. Weak high, big order block up here. Let's speed this up. There it goes, filled that order block. Now it's got to find more liquidity. Where's the liquidity? Probably down here. Here, took some. Took out all those stops right here. Took out all these stops. Here's relatively equal highs up here. Took out the relatively equal highs. And you see this move right here? This is basically the order block that it came back in and retested. Okay, so just because you missed the first move, have the patience to wait for it to come back to pick up those orders before it makes its actual move. And you'll see here, if we back this up, bearish fair value gaps. Okay, so what you want to see is an inversion of those, which comes right here. There you go. Totally inverted. Now, if you have real patience, you would wait for some sort of retracement. But, I mean, on 10 seconds, I probably would have just entered here and set my stop loss below here. Took out those stops there. Now you got relatively equal highs right here. Took those out. And notice this entire thing is just accumulation. So yeah, that's just kind of one way to look at it. All right, market has opened. One, two, three, 4, 5, 6, 7, 8, 9, 10. Add those to my volatility. All right, now we wait. I'm gonna go make a cup of coffee. I'll be right back. Again, not really trading anything until I see how the first 15 minutes of the market open up, and then I'm gonna start looking for opportunities. And yeah, if I see anything pertinent that needs me to speak, I will talk. Thanks for joining me today, guys. I really appreciate it. I was kind of scared yesterday. We had like 45 viewers. Today I was like saying to Rick, it'll probably be like 3. But hey, we're up to 20, and I appreciate that. Thanks, guys. 15 minutes has closed. Or is about to. Definitely trying to get a lot of these off my radar. These are not liquid enough for me to be interested in today, so I'm going to delete that one. This is a respected bearish order block here. Very respected. Sellers say no. No, sir. Not yet. With volume. So there's a harmonic pattern here. Bat. And it's already hit target 1. Target 2 is up here. This blue line. Hiding in this order block here. I'd say this one, probably strong likelihood that we're going to do some sort of type 2 return where it comes back down. You can also see another harmonic pattern is potentially printing that gray. It hasn't come in yet. It keeps bouncing in and out, but definitely could see this one going lower, sweeping this liquidity, maybe filling this fair value gap down here, and then going to run. So this is something that I want to keep. I actually did pretty well with BATL yesterday. It's one of the ones that helped me recover from that on-stream trade. Keep an eye on that one. Yeah, I'll turn the music down. Hold on. All right, music's down. Let me know if that's any better. Turn it down. Oh, I know what I could do. Little quick tip about candle range theory. So the way candle range theory works, like here, for example, is when you see a swing failure pattern, which is this, well, so this candle's bearish, right? Price action tried to reclaim it, couldn't do it, closed below the range. Next candle came in, closed below the range. This candle came in, wicked down, wicked back up, but still closed below the range. But here's where things changed. On this candle, you get a swing failure pattern where the price came down, took out the bottom of this candle, but then came back in and closed higher than the close of the previous candle. So candle range theory says that at a minimum, what we should see is a test of the top of this range here. This next candle should go at a minimum to test this. So if you bring these out to larger time frames, let me find a good example. Because you want it at the bottom here. So here's a good example. This candle, we got bearish candles, swing failure pattern. Candle range theory says that we should go test the top of this candle. So you can see that's basically what we did. So if you see these type of patterns on longer time frames, you're not crazy to enter a position, put yourself one tick below the base of that candle and target the top of that candle right there. And if you had done that trade here, it's a 1 to 162 risk reward. You're risking 5%, but you would have made 8%. Oh, meat. Good morning. Yeah, no, definitely not doing that again today. I did cover that. I felt pressured yesterday to entertain the people. So I took a trade that was a little gambly. And it did not pay. I got wicked out. I think I lost like $400, but I spent the next couple of hours trading back and got my money back basically. Closed yesterday down like, I don't remember, less than $100 loss. So today we're not going to be doing that. I'm not going to feel any pressure for the 14 wonderful people watching to put myself in any positions I'm not comfortable with. Some days, you know, you don't trade anything. You just stare at charts. For anybody who doesn't know, meet cubes there, or cubes in chat there. Excellent trader. Actually had trade of the year. I dubbed it. What was the percentage? 30,000% on a short of some crap coin. On leverage. And he's very heavy into the harmonic trading that you see on the screen sometimes here. this stuff. I think the music should be a lot more reasonable now. Can you give me a check on that, Clive? This one caught my eye. Yeah, I forgot to mark this one. I've been in on this for a bit. As you can see from the $90 losing P&L. 44 I own it for. Stop loss is at 37. Feeling as good as that one as I did when I entered, but we'll see what happens. Hot tip here, when you see candles like this, that many in a row, even if you do get a bounce here, you're very likely to have another drop to the downside. Usually these power moves here are followed by a short consolidation and then additional wave. Very rare in DC circumstances where it just goes like this. Pretty much never happens. I entered this one here on the 30-second chart. Stop loss down here. All right, guys, it's 10:30. I'm gonna get some breakfast. Let these trades sit. Right now, I've entered into BATL, KOS, and MOBX, and I will, I guess, let them run. And I should probably start giving updates the next day as to like maybe a review I could do in the morning. Be like, all right, this is why I entered this trade yesterday. This is what it was, and it worked out. It didn't work out. This is why it worked out. This is why it didn't work out. You know, whatever, and learn from it. But yeah, I'm going to go get some breakfast, and I wish you guys good trading today. And wish me luck. Hopefully those 3 trades will be in the positive by the end of the day. All right, guys. Enjoy your day. Thanks for joining me. Really appreciate it.